love that setup on gold. I want to take that trade too, but let me go get my laptop from my car. You know what? I left my jacket inside. Is that Santa's? Oh my! Oh, not again! Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, guys, good morning. Welcome back to another live stream. Hope you're doing well. Happy Monday. You know, we're getting close to Christmas. It really crept up on me this year. I don't know about you guys, but it's been a really busy year for me on a personal life note, and just makes time go so fast. But we're back here for another trading week, and a very important one. We have inflation data this week, and CPI is going to tell a really important tale about what could happen next to this financial market. I mean, we have expectations for the Fed to cut rates December 18th in their upcoming meeting. But the question from there becomes, well, first of all, is that true?
Hey folks, it's me again, and if I'm here, then you know that something's happened, and it probably means that the little hamster that runs the building has gotten tired and got a sip of water. So we're waiting on the power to come back. I mean, the power's on, but the internet fluctuated, so it'll be back here in a second. It's rebooting. So here, let me go full screen so you can see my lovely face. Whoa, that almost crashed my computer doing it. That's not a good sign. Okay, Nick's coming back. Internet's back. All right, back to our regularly scheduled program. I'll get him in here.
All right, guys. I'm not technically on hard internet. I just attached my hotspot temporarily. Not sure why that happened. But we're going to try and make the show must go on kind of thing. Give me a second. I just want to, Chandler and James, if you guys get a return of normal internet, let me know. Actually, I mean, I guess I can. Well, it seems like it's come back. I don't know. Weird blip. Sorry, guys. It brings me back to a time where I feel like I'm a little veteran to losing internet because like a year and a half ago, 2 years ago, we were plagued by internet outages. And it was like the most infuriating thing. As you can imagine from a business perspective, like this is literally what we do. We put on a show every day. So internet like cutting in and out was so annoying. Long story short, it seemed like the Wi-Fi router that they gave us was really faulty. So we tried everything. We tried, finally we just had to, we found out it was the modem. It was the issue this time around or last time around. But this time, to be honest, we should be mostly thankful because we have had very infrequent internet outages, at least internet wise. We've had power outages, which is arguably worse because then you have nothing. But we're back. Good to see everybody. Chandler, James, is the internet working for you guys now? Let me know if it's back to normal. I don't want to switch off my modem or my hotspot until it's good. Okay, Wi-Fi is back on. All right, let's take the plunge, guys. I might briefly be gone. I'm just going to connect. Okay, should be good now. I'm on the true internet. Sorry about that. Again, technical difficulties here this morning. Wi-Fi is still waking up, it seems like. It's 9:30 a.m. Hey, we're just in time before the U.S. stock market opens up. So all good. And we are all set. I remember those days. Also switched the streaming platform. Yeah, we had high hopes for a different platform. And Chandler and James went to war to try and get a cooler platform set up. And in the end, we just realized it's kind of like when you broke up with the wrong person. You realize, you know what? StreamYard treats us pretty good. StreamYard was always there for us. And honestly, StreamYard is really top dog. It's a great platform. It's so much easier on our end to manage. We just hope that over time, StreamYard continues to improve. And they have been. They've been real good. They've been improving their software. Anyways, let's get into some markets. I apologize for the delay this morning. Let's get started. So this week, as I was just discussing before the internet outage, that we have some really key market data coming out. We've got the Wi-Fi issues, but we've got bigger issues to think about. We've got CPI issues, right? CPI is on Wednesday, and CPI will likely be a very market moving event because here's the thing about CPI or inflation right now, right? Inflation has been trending down, but then recently we saw a little bit of an uptick in inflation. The thing about economic data is just like how a technical trader might apply a moving average to look at the price action, a moving average or just a visual average is also really key on fundamental data. So what I mean by that is that if you were to kind of put a simple, 3 or 7 period moving average, it would probably look something like this, right? And what we've seen is inflation cooling. But the question is, are we going to get a bit of a breakout in inflation? And if inflation starts to rise, what does that do to the market? And I'll tell you, I think that if you get a tick up in inflation, it could throw a wrench into this whole story that we've had recently that we're going to get the perfect soft landing. Now, I am not, coming out as a straight up bear on the market, but I think that the market right now is priced so much for perfection. Everybody is bullish right now on the stock market. And I can show you that, right? I'm not just saying that off the top of my head. I can show you some stuff that would give you a good example of that concept. You can see that the put call ratio has been hovering in low territory for a minute here. Now, the put call ratio is one of my favorite indicators to look at for sentiment, because what it does is we look at the S&P 500 options volumes, and we say, look, if this number goes high, that means that everybody's trying to get in on some put buying, right? They're buying puts. They're out there getting defensive. They're getting scared. They're buying protection, right? Puts are bearish bets and can be used as insurance to hedge portfolios. But my point is, a lot of investors got real bearish, real scared ahead of the election. And that ended up being a really good opportunity to actually take longs. But we have to be fair. When the put call ratio is very, very low, be cautious for possible reversals in the other direction. So when we look at stocks, right, stocks are up, and away. It seems impossible for the stock market to come down right now. It doesn't ever come down. It goes up every single day, it seems, until it doesn't. And I'm not a bear, but I'm pointing out that when you get market moves like this, just be careful that you're not on the same side of the boat as absolutely everyone else. So I am bullish, but I want to see the boat normalize a little bit. Think of our boat, right? If this is our boat, tilted, right? This is the boat tilted, or the boat, flat, or the boat tilted the other way, right? Let's imagine that we're looking at the front of the boat and is it tilted one way or the other? This is, sentiment. This is a sentiment. This is a sentiment. Right now, if this is bearish, right? If the boat's tilted really bearish or the boat's tilted really bullish, right now, we're like right here. Everyone is so bullish. And the reason that is very key to watch is that when you have everyone's over here, right? Everyone's piled up over here. When something comes along to spook the market a little bit, right? Just a little bit. For example, I'm not saying this is what I think is going to happen, but if we got a scare in inflation this week, what happens? A lot of these people shift. The boat can flip very quickly if everyone's on one side of it. Does this make sense? And this doesn't just go for stocks. This goes for everything. When everybody is their sentiment matches the same way. You just have to be careful. Now, sentiment itself is a really poor timing vessel. It's really bad. Like, just because everybody's on one side does not mean, oh, it's going to crash tomorrow. But what it does mean is that when a fundamental catalyst comes along that creates a jump in sentiment the other way, it can be very violent if everyone is on the same side of the trade. Does that make sense? If that makes sense to you, do me a big favor. Just type yes in the chat and thumbs up the stream. If you're just tuning in, I appreciate you being here. Thank you guys for tuning in to this Monday morning show. If you enjoy this commentary, again, hit that thumbs up button. It does help just to support the show. So if that makes sense, then we have to look at this and we have to say, look, right now we have indicators. This is why we use sentiment indicators from the Edge Finder. We track how that crowd mentality is feeling. And again, just because everybody's bullish does not mean it has to crash tomorrow. In fact, if you took sentiment extremes as a perfect timing indicator, you've been kind of wrong, right? Now, this one would have been amazing, but you could have, went long the stock market there and it tanked more as the put call ratio got more extreme. My point is, sentiment indicators are not great timing vehicles, but they're wonderful sort of let's feel out the weight of this ship. And I really like the analogy of one side of the boat because I feel like it really, you can imagine if everybody's on one side of a boat and they run to the other side all at once, that shift is going to be a violent move on the boat, right? So that is the thing where you have to be careful when everybody's on one side. It doesn't mean they're wrong. The stock market, I think, could continue to go higher, but I do think I want to partake when the boat is more in the middle, or on the other side. I want to be not necessarily contrarian per se, because I wouldn't consider myself like a contrarian trader. A contrarian trader would just be like, I'm outright shorting this rally. I'm going to, play the crash. I'm not that, right? I'm not, contrarian would have been terrible if you had been contrarian on gold this year, right? If you were bearish on gold all year, there were plenty of people who were very bearish on gold all year long, and they got smoked by this rally, right? So I don't like to be contrarian just for the sake of being contrarian, but I do like to pay attention to sentiment, and it's a really important indicator. So when we look at put call ratio, where it is for the stock market specifically, again, I think that is tilted a little too far bullish, and that there is some room for a pullback. And if that pullback happens, then I'm happy to, buy into that rally. I've got some indicators currently telling me for looking for bullish setups. NASDAQ's the top rated bullish instrument on the Edge Finder at this time. So I would love a pullback, but I'm not going to chase when everybody's on one side of the boat. Hopefully that makes sense. Gold is also giving us a bullish reading right now and a nice uptick in the price of gold today. Did you guys see gold up 1.3%? So I'm getting a bullish rating from the Edge Finder at this time. What that means, however, is I still have to find a good technical entry point, a good technical setup on gold. So we've got gold bullish rating on the Edge Finder. Great. What I'd be looking for would be a breakout of this structure high. If we get some strength coming into gold here, I love the idea of possibly trading it long back to those all-time highs and perhaps even beyond. But I need the technicals to really give me that confirmation. Did you guys see silver? This is a really positive thing for gold too. Even if you're not a silver trader, you should always be keeping an eye on silver because it moves really quick compared to gold. In fact, silver is significantly more volatile than gold. It moves on a percentage basis a lot more than gold. And so, you can see today, gold's up 1.3%, and meanwhile, silver's up 3.5%. Really big move. What's going on with the metals? Well, China popped over the weekend. Did you guys see this? We got some nice moves forming on the Chinese stock market, and I do have a long position going. So Chinese stocks for me working out this morning. I am long MCHI. It's an ETF that tracks the Hang Seng Index. And what we can see here is that this position is working really well. What's not working so well for me is what I did is I also sold a covered call on MCHI. So what that means is I'm pretty much capped on my upside right now, which is not as fun. But again, I'm long the shares from back, I bought the dip on the Chinese stock market. It's popping here today. But then the question is, how much further will it go? And by the way, if it keeps going up, I don't have any more upside because, again, I sold a call, the $50 calls on MCHI. So you can see those calls are very red, but the underlying position is still very green because I'm long the shares and shorted calls. So I sold the rights to the shares above $50. That's a way to say it. Anyways, a lot of stuff is up on this. Tesla's up big on this. Makes sense. Chinese EV markets are huge, and Teslas are really popular in China. So China's getting a bit of a bump here. I do also have a covered call on Tesla, which is in the red here with this big pop, of course. But a couple good positions moving off of China. Lot of puts sold, a lot of calls sold. NVIDIA's down. Is NVIDIA still down? NVDA. Yeah, look at this. NVIDIA down 2.9% here today. Probably a little bit of a drag on the NASDAQ. But still, I mean, this just shows you the resiliency of the stock market. Even though you've got, the big one, NVIDIA down, there's other ones that are propping up this market still. I mean, NVIDIA down 3% today. Let's take a look at SMH. Interested in this one. If we get a bigger sell off on this one, I may take another stab on this. Russell's up 0.7%, Dow Jones up 0.17. Again, I'd like the NASDAQ long, but need a bigger pullback. Let's see if we get it this week. Oil's up 1.3%, but has been getting crushed recently. Bitcoin, I'm still long Bitcoin. IBIT is the ETF that I'm trading. Oh, I'm not logged in. Well, I'll just pull up my thing. IBIT, I'm trading this long and just very much break even on it. Has not made a significant move for me on this trade. But I do like Bitcoin. I'm still bullish on it. However, I have a stop loss in place. If this market rolls over, Bitcoin can't continue the momentum here, then absolutely we'll be getting stopped out on this one. I took a trade here recently on Bitcoin that went really well. I bought the dip over here, got stopped out, bought again here, and it ran, and then I took profits here, which I took profits because I trailed my stop loss, and my stop loss got wicked into and then reversed. Anybody been in that situation? I've been there many, many times. Trying to avoid it is like trying to avoid getting sick. You know, you're going to get sick sometimes in life, unless you just never go outside, never take a risk in your life. AKA, if you never take a trade, you'll never stop out. But sometimes you're just going to stop out in trades. It's just going to happen. Is the Chinese stock index on the Edge Finder? No, it's not. I wish it was. At some point, we'll probably get it on there. China resuming its purchasing of gold, the serious situation, adding further support. You know, and I do like gold. I like gold. I've liked it I'm a perma bull on gold. I've said that many times on my show. I always lean bullish on gold. There are times where I'm actively momentum trading it though, and there are times where I'm not. I haven't been recently, which has served me well. However, I'm liking the setup currently if we can start to get a breakout. You've got the Chinese story, which is good for, you know, metals in general. You've got uncertainties on the geopolitical front that are not going away. I mean, there's been some things that have been arguably more optimistic, more hopeful here recently, but you know, the world is unfortunately still a troubled place, and so I think gold has a little bit of a security buffer for any portfolio. So I like gold. You know, I was doing a study yesterday. If you had a basket of items in your portfolio that you just held through 2008, you know that gold did pretty dang good compared to the stock market. I know everybody loves the stock market right now because it's going straight up. But during 2008, during, you know, downturn years, gold actually held up decently well. Let's see, does this go back to 2008? It does. I mean, look at 2008. Gold did quite decently well when you compare it to the NASDAQ, which during 2008 was a horrendous period. I mean, if you were long, imagine, you know, feeling like you're missing out. You bought this thing and you watched your portfolio. If you were just long NASDAQ, you went down by 54%, and it took you many years just to get back to break even. I know I say this all the time, and if you watch my videos all the time, you're like, Nick, you say that literally twice a week. It's just a reminder, not just to me, but to everyone about, you know, stocks. They do go up over time, but they don't go up all the time, right? There are times where they're really ugly and you'd much better be served trading and investing or you know, playing other things, playing commodities, playing, you know, bonds, things like that. Speaking of bonds, TLT down 0.6% this morning. Yields up just a little bit. But yeah, I like gold on the long side. Just looking for a breakout here. If I can get that, then I'm very interested in possibly getting long. I mean, we got a +6 score. That is a pretty solid score on gold here. What about inflation? Inflation, gold currently has a +1 score. So CPI could either strengthen that further or hurt the story for gold. If you get hot inflation numbers, it would actually be bearish for gold because that would be really strong for the dollar. And I know people always hear that and they go, what? What do you mean? If inflation goes up, shouldn't gold skyrocket? And it may sound counterintuitive, but the answer is actually no. If you look at 2022, which was inflation city, gold actually did really poorly during that time, and the dollar did really, really well. It's because in response to inflation, the Fed raises the interest rates in the United States. That process sucks up the money supply and makes the dollar look strong. A stronger dollar buys you more gold per dollar, making the price of gold go down. It's a little bit counterintuitive, but inflation by itself, given a decently strong economy, is actually quite, like rising inflation is actually quite bearish for gold. Now you might say, well, Nick, if they're printing $1 million a day or a second, shouldn't that make the price of gold go up? Over the long term, yes. If you print a ton of supply, eventually gold prices will go up from that. It has to, right? More currency in circulation means it should take you more currency to buy the existing supply of gold. But in the short run, if the economy is decent and they are just dealing with inflation, the Fed has the ability to still ratchet up interest rates, and that really hurts the price of gold. So gold has really benefited this year in 2024. It's had an incredible year because inflation has been falling for many places, not just the US, but take a look at New Zealand, take a look at Japan, take a look at the UK, Europe. These places are seeing inflation fall, which gives their central banks the ability to reduce their borrowing costs, aka their interest rates, which is making their currencies weaker in terms of purchasing power and making gold do very well. Again, I know a lot of people hear that all the time and say, well, inflation should make gold go up. I just showed you like 8 different charts of the major G7 nations. All of their inflations are falling this year. And look at what gold prices did in response to falling inflation. They skyrocketed. Again, you get these comments all the time about people who are just not really they don't fully understand the fundamentals. And so they'll say, oh, fundamentals are stupid. Gold went up on falling inflation. That makes no sense. You just may not fully understand how traditional kind of like finance thoughts work. I'm not saying I know everything. Trust me, I do not. I'm learning new things every single day about the financial markets. But that one is a common newbie mistake, is thinking inflation up, shouldn't gold go up? It's not quite that simple. Increase supply in gold, would that mean theoretically be lower if you increase the supply of gold? Yes, but they increase the supply of gold really slow compared to the rate at which they increase the supply of fiat currency. They're printing that stuff all the time. It's why the store prices go up, and then they'll blame greedy businesses. Oh, businesses are being greedy. That's where prices are going up. No, it's because your government's spending $1 bajillion a second. They're printing more money into circulation. Of course, businesses are going to raise prices because the value of the currency. They didn't raise prices. They just adjusted prices to fit the value of the dollar or the value of the euro or the value of the pound, right? That one always triggers me because people love to say, oh, businesses are just being greedy. Is there some of that? Absolutely there is. I'm not saying they're not. But to say it's simply just businesses is so unfair. It is the government that prints currency. They control the money, right? So if they print $1 bajillion a second, businesses have to raise their prices because the value of the dollar has fallen, or the value of the pound or the euro, etc. Anyways, oil prices up about 1.8% here today. And again, we'll see how that plays out with this week's inflation statistics. By the way, the tool that I've been showing here in the video today, or the live stream today, is the Edge Finder. If you guys are interested in trying out the Edge Finder, we are offering 30-day trials. They're not free, but if you're interested in paying a small fee to try out the tool for 30 days and to work with a member of our support team, we'll drop the link here in the chat to where you can sign up for a 30-day trial to check out our software. And you can also send us a direct message. That's another option. But if we could drop the link for the trial form, that would be awesome for people who would like to apply for information about that. So if you're serious about your fundamental analysis, if you're trying to get involved with a tool like this, if this would be beneficial to you, try out the Edge Finder using this link here dropped in the chat. It should also be in the description as well. Or you can just go to a1trading.com and request a trial there. Okay. Now, guys, we're going to take just a brief break, and then we're going to be joined by Ivan to talk some more charts. Stay tuned. Ivan's joining the call in just a second. All right, and we are back with Ivan. Hey, Ivan, happy Monday. How you doing?
I'm doing good. And you?
It's good to have you back. I'm doing well as well. What's the story this week, Ivan? We've got CPI on Wednesday. Um, what set the scene for us? What happens if inflation comes in hot?
Uh, well, Assad left Russia. That's the big story. And then the other story is that China says it's going to resume buying gold. And then we have CPI. Then we have PPI. And then we have FOMC the week after that again. So was inflation about 2.6 last time? So anywhere about 2.8 is going to be dollar bullish.
Yeah, and again, that inflation report last time around did tick up slightly higher. Question will now be, do we get a repeat of that? Are we going to get a 2.7, a 2.8%? So we'll see. If the dollar gets stronger, or do you think currently that the dollar has more upside? Here's the US dollar currency index. Is the dollar just pulling back here, or is this, do you think it has more downside? Where do you lean right now ahead of the CPI report?
Leading sideways. I was bullish last week, and probably is this week again, but I don't know. Seasonality is bearish. We have priced in higher chances of a rate cut, as you mentioned. So where do I fall? As I can see both cases, I think it's incredibly difficult at the moment because we have everything is about nowhere extreme at the moment. It's just in between, like a 2.6 inflation, 3% GDP, 2 point what is it, 2.8 PPI, PCE is around the same thing. So nothing too crazy. It's not like 8 or 9 or where we can have some fun.
Yeah, no, I think as you just mentioned, there's some outperformance in terms of the U.S. economy that I do think is a part of the reason the dollar is so strong. We heard from Jerome Powell last week. He actually used the word to describe the U.S. economy extraordinary, which I thought was really a strong take. There's not much better words to describe it. So extraordinary economy, according to Powell, and partially here the upbeat, the surprise in U.S. economic data, I think is largely why the dollar is up. But perhaps it's also up a little bit off of the inflation questions that traders, investors have about the upcoming, Donald Trump return to office. Is that going to be inflationary? There's a couple things that I keep hearing people float around, like the idea, of course, of the tariff concerns, but then also the possibilities of what deportations, if that does become a bigger theme in coming years from the U.S., if deportations happen and that leads to a gap in labor supply, that could also be inflationary. So I think that investors are seeing a strong U.S. economy, and they're seeing a labor potential shortage as well as tariff situation. To me, it seems like the U.S. has a lot of potential for an uptick in inflation. But the caveat then is oil prices. Oil prices are down quite a bit, which helps with the inflation story. So you've got a little bit of a tug of war here on the inflation side, or expectations going forward.
I think you have to ask a Texan how what does dude called the senator made everyone to show their ID or wherever that crisis was a year ago or so, where all the documented or undocumented people that was in construction left or went home or got scared or whatever. And you can kind of, I think it was like a month, you can take that as a case study as what do you think will happen? And as far as I remember, as far as the reports I got, everything stopped.
Yeah, which, and again, we know from history recently in 2022, when you have everybody leave work, it is incredibly inflationary, like the shipping container stuff, right? When everybody left the, shipping containers getting shipped back to China to move product, when that stopped, when people left their workstation because of COVID, it was incredibly inflationary because the supply line of the world gets stopped up pretty quick. So, with the potential labor shortages, I know there's a little bit of a concern on that front. How
Mhm.
how real does that seem to you? Is that something you're thinking about with the dollar index?
Well, it depends. I think uh, one is it gonna be shown in the unemployment rate or employment rate? Sorry, or is it just gonna be people just vanishes? Because how is that gonna? Well, in all essence, it's going to be inflationary. But then one thing that was mentioned in the Zoom meeting an hour ago in the VIP group was he also wants to spend a lot of money on ICE, on deportation. So he needs to print some money. And as far as I remember, he also had to help out some corn farmers because China doesn't want to buy corn from America during trade war. So he has to also start spending some money. That's another thing I haven't talked about yet.
Yeah, I mean, it's there's a lot of ideas and a lot of changes coming, and I think that to me, regardless of how you kind of think about those changes, if you like them, if you dislike them, one thing that we know for sure about the market in general is that the market
Mhm.
doesn't like uncertainty. It doesn't like guessing what the outcome will be. It doesn't like knowing if Powell's going to raise rates or cut them, or it wants to know things. When it doesn't know things, it gets more skittish. It gets more nervous. So I don't
Skittish.
actually. What'd you say?
Skittish.
Yeah, like a cat can be skittish, like runs away, like suddenly, like really easily scared. I think that the stock market too, specifically, um, I was mentioning earlier in the thing, I think that this thing is a little bit frothy. I think it's a little bit expensive. And I think that any one of those things that we just mentioned could at any point kind of the embers are there to turn into something a little bit more concerning for the market. And I'm not necessarily saying I think that, there's a huge bear catalyst coming and that Trump's going to screw everything up. I'm not saying that at all. I'm just saying that the
Oh.
market doesn't know. And when the market doesn't know something, it gets a little bit nervous.
Okay. Yeah, I can agree to that.
What are your
But
thoughts
I
on the
still
indices,
don't, I still
though?
don't understand skittish. I mean like sliding, like
Well,
falling and sliding, or
skittish, basically, it's like, think about how, do you have cats, Ivan? Do you have pets at all?
yes, I have a cat.
Okay, I've got two cats as well. They're awesome. And sometimes one of my cats is really skittish, meaning that if she like hears a noise or something or any little thing will make her run away. She's really scared. She's scared, skittish, kind of uh there's your American vocab word today. Actually, it's not American, it's just English.
Or is this millennials?
Yeah. So, I
Yeah.
think that the stock market could get skittish, to use our vocab word of the day, if any of these changes become more real. Not necessarily that they're going to be bad changes, it could be great changes in the end, but just the matter of changes could be a little nerve wracking. So, I want to get your thoughts on the indices. S&P 500, NASDAQ, Dow Jones. How are you thinking about these things? Are you feeling as nervous as I am with them? Again, I am bullish on them, but I think that sentiment is a little too bullish. They're too excited out there, and I don't really see any opportunities for me personally to get long on them when they've made such big moves. I've got to wait for some sort of rebalance of the sentiment in the markets. Do you agree? Do you think it can just keep going? Are you long? Are you short? What are your thoughts?
Um, I'm not skittish, but no, it's a bit overextended.
Mm,
But I don't know. I don't know. Okay, maybe that's a different reaction to the same thing. I see opportunity. I am in a forward positive. Like this is great. Because if you're falling, then I would be a bit more depressed inside and everything. But yeah, as somebody else can S&P drop in a 4 to 5% in a day. Yes, it can. I don't remember where the break circuit breaker. Sorry, is it 7.5 or so?
mm-hmm.
Because it still did and still can during COVID crash. But yeah, it's more like over a couple of days. But 5% down is more than welcome if that's what the market decides to do.
Yeah. And I think it could happen pretty easily. I mean, a couple of years back in 2018, I remember during the Christmas holiday, there was just a really aggressive sell-off. Let me just pull that up. 2018, check this out. So this was back, I remember right around Christmas time, we saw a very sharp drop in the stock market. And during this time, the story actually was, believe it or not, years ago, the story was trade war concerns with China got more real. All of a sudden you had, and this is no 5%, this is a 20% pullback that occurred in about a 90-day span in the US stock market off of those China concerns, those trade war concerns. Of course, the market did bounce back pretty quickly from that. But I think that when, again, you get into this environment where, I mean, look how similar that chart looks. Ivan, it even looks the same. Market's just ripping higher. Everything looks good. And then just when everybody feels like it cannot possibly go down, the stock market can have some very sharp and aggressive sell-offs. So I'm not necessarily saying I think that's going to happen. I think it can continue to go up and up and up. But once the change happens, I'm just a little bit cautious about being on the same side as everyone else, being overly bullish.
So you're the devil's advocate at the moment, then.
Yeah, exactly.
We know tariffs is going to come. We know it's going to come. It might come, and we know somehow, depending, but somehow we know the consequences. But what we don't know is we don't know what Canada is going to do retaliation and how much that's going to impact the U.S. economy, because they are maybe more damage to the Canadian economy potentially, but they are so intertwined. They're so together.
Yeah, no, I mean, that you're making a good point too about there's Canada, there's Mexico, there's China, there's Europe, UK, all these different places. If we're back to the negotiation table about trade, there's a possibility that it's not a perfect transition, that there's uncertainty there. Again, it might end up being still a very strengthening thing or a good thing for the US. I'm not, here to claim so or not. I'm just saying that the uncertainty of it could cause some hiccups in the stock market. And maybe it's also why gold is up. I mean, I know gold, China announced buying of gold and Chinese stimulus got a big bump. I mean, the Chinese stock market's flying here today. So you've got this story of that side, gold, silver, copper, all up today. So commodities ripping. Yeah, I mean, it's an interesting thing. And this, it also kind of tells me is that the recent bid in commodity prices, not necessarily oil, but copper, silver, could also be sort of a supply thing. If there's more tariffs, if there's more boycotts, if there's more sanctions due to a trade war, commodity prices could become more precious.
I don't know too much, and you probably know more than me and everything else, but didn't China last week or the week before that say that they're going to ban or not export precious metal that goes into chips and stuff like that to United States, that they are in charge of 80 or 90% of the production of?
I haven't heard too much about that, but that I've heard that story in general. Like the chip trade is a very touchy subject on both sides, on China side and on the US side, and of course on Taiwan side, which is smack dab in the middle. But yeah, I mean, that's what I mean is I think that if Trump's return triggers more trade war negotiations, I think commodities could be a winner in that story. So I don't know. It's an interesting time. I think that, I'm going to keep an eye on the commodities and see if I can trade some stuff on that side. I do have some bullish positions on silver and on the Chinese stock market. So those things are working today. Bitcoin's down about 1% today, but has come back a good bit from, I mean, this thing's just so volatile. So volatile. Dogecoin, I just like to keep it on my radar now. I've got all my money in Dogecoin. Tell me what I should do next.
Crash it.
Ivan, do you have any crypto? I think I've asked you that before, but I forgot what you said. Don't you own some long-term Bitcoin or Ethereum or something? No. Okay. No, you don't.
Not that I know of. Maybe it's something that's done in my name, but not. I have only exchanged in Bitcoin.
Okay.
But I haven't traded it for money.
Yeah. Interesting stuff. What else,
But
Ivan? What are you watching? Are you watching yen pairs at all?
yeah, I do. But if you see my screen, Chandler, that's the news article I'm referring to, where they announced that they are going to have restrictions on metals that goes into chips and it also goes into military and civilian technologies. So those metals are, what was it called again? Gallium, germanium, antimony, and some super hard materials that the U.S. military uses.
Interesting. Yeah, I mean, I just think that the general nature of trade war stuff is it brings back the rarity of some of these commodities that again are potentially more hoarded on both sides if that happens. And again, supply issues, the market hates that stuff. Remember in 2022, oil prices went skyrocketing because of the whole situation with Russia and Ukraine, and that's an example of a change in the market that people really didn't like because that caused a lot of inflation, caused a lot of uncertainty about where prices would go. So yeah, we have to keep an eye on that. I mean, silver up 4% is no joke. That's a big move for silver in a single day. Copper, same thing, up 2%. Copper looks like it might be trying to break out here. Gold's up 1.55%. Natural gas, oil, commodities just having a good day here today. Same thing with the Chinese stock market.
Why not? Wouldn't commodity have a good day with China going to do more stimulus and what those people were thinking of doing? A good news, I think, for the yen traders is that market is pricing out a rate hike from Bank of Japan in December.
And
really? we had a bit of a higher than expected GDP this morning, and then we had some what was the other one? There was some Chinese. Of course, I can remember where I found it. There was some Chinese numbers this morning. CPI that was a bit low, I would argue. 0.2 year over year and negative 0.6 month over month. So, and then I also think that it is because yen or China is doing their stimulus. That's why yen is weakening and now rising again, and now we're going to go bullish again, and now we're going to start buying again.
Yeah, I mean, the yen has been. I was looking at the dollar yen this morning, just making a little bit of a comeback move here. So where do you think the yen's going, Ivan? Do you think we have more yen weakness? I kind of lean towards. Well, I'm just really neutral on it right now, but I'm curious your thoughts. Do you think the yen gets stronger? Do you think it gets weaker from here?
I think weaker from here. And I feel like that is barking up the wrong tree. Because that was the wrong use of that. But I feel like it's just a short-term situation that we're going to be yen bearish, because at some point in life we're going to rate hike in Japan. It's just not going to be today and tomorrow. Maybe January, maybe February, maybe March. But in general term, I say would like euro yen more than dollar yen, because if yen starts getting weaker now and dollar is kind of weak, seasonality, or even just today, I don't know if this is I don't know if this is the best trade today, but it's getting there, it's going around. But also these moves where you just go green, 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 or blue, 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 for me though, it's a bit more scary to trade that. But pullback, can't do it right now.
So with dollar yen, with your chart there, what would you look for possible entries? Are you looking for a breakout? Are you looking for a return back towards the lows? What would get you to actually set up a trade?
Somewhere in that direction. Also pullback. That's very micro, but somewhere in that direction.
Sure.
And just for a show, I want a 38 to 618 pullback, either there or there. It's just for visuals, just to see how good I'm at putting out these boxes. So somewhere around there would be great.
Okay. Yeah.
Also a bit off, but yeah, somewhere around there.
Yeah, and of course the yen, for the currency traders out there, being long yen pairs does also usually offer a positive swap. So it is a very popular carry trade tool that being said, carry trade typically does well when the global economy is a little bit upbeat. So I think that with the U.S. economic data still pretty strong right now, the dollar yen looks interesting to me. So we'll see. We'll see what happens. Do you like dollar yen, Ivan, or is there a different one that you like more? Aussie yen, pound yen, euro yen. Which one do you like the best?
Euro yen.
Mm-hmm.
I don't know why I do like euro yen or dollar. Well, I guess pound yen has too much volatility, so I always lose money there. So I guess it's just feelings and a bit of data that shows that over time when I do trade them, it comes more in than out.
Sure. Yeah,
More.
it's interesting how that everybody has their charts they love trading the most, the ones they feel they like. There's a little bit of subjectivity to it, I think. Just the ones that you like the most, the ones that sound the best, feel the best, trade the cleanest to you. So everybody has their preference. Everybody has favorite currency pairs, things to trade. You know, some people like Bitcoin, some people like indices. But for the audience, it's really important to just kind of find your niche. Ivan, how would you tell somebody who is like, well, I haven't really found a chart that I really like? How do you find the right chart to trade?
Wow, that's a big question. How many hours do you have? The one sentence I probably do tell or would say, and I'm just going to make time now so I can think of it. I don't know. It's what makes you sleep at night. What does that mean? It means that the whatever fits your volatility so far, at least your volatility acceptance, meaning if you can sleep well at night and you're always what do you call anxious and stressed, and you're trading euro yen or pound yen or pound dollar, and it always hits your stop loss. Maybe not. But if you go into okay, we traded these pairs, many pairs, for a lot of times, and then see kind of what fits you. You kind of find out that dollar, also Australian dollar, US dollar, New Zealand dollar, US dollar is the more calmer ones, and pound and or Swiss is a bit more volatile, and for some people that is more volatile is better. For me, it's worse because it hits stop losses more than anything else.
Yeah, and
So it comes down to
that's a great answer. I think for currency traders specifically, you can also look at the average true range for each currency pair. It will really help. I mean, just off top of mind, if you like charts that move slower, you may look at things like euro pound or dollar Swiss franc. Those things typically move less pips per day. But if you want more volatility, you might look at something like pound yen, dollar yen. Yen crosses are very notorious for moving quite a bit very quickly. They move a lot more than, again, euro pound, dollar Swiss, Aussie Swiss. You know, the Swiss franc currency pairs typically move a lot less. They're a little quieter. And then, you know, you can get into, if you're more interested in, depends on what you're trading. If you're trading Forex brokers, CFD brokers, gold and silver move a lot. Indices move a ton. A lot of people are afraid to trade the indices because they trade on a CFD brokerage. So, you know, US 30 or NAS, they move massively even with a 0.01 lot size. But if you switch over to futures or ETF trading, like what I do, or you'll actually find that those things can be treated just like really respectfully, and you can actually have very small moves on your account. So there's all sorts of different options, but I would encourage everybody listening, find your charts that you like the best, the ones that move the way you want them to, or move with lower volatility or more volatility. It's very personal, the choice you make, whether you want more volatility, less volatility. All of those things are options that you can choose, and those are things that you can control. You can control which charts you trade, your position sizing. You can't control how the market moves. So something to think about.
Mm-hmm. Can I just say something before you kick me out?
Yep.
I didn't notice, but there is a bunch of interest rate meetings this week.
Interest rate data, you said?
Meetings, yeah. So
yeah.
RBA, Bank of Canada, Swiss National Bank, and the European Central Bank.
Oh yeah, you've got a busy week here, and then of course the Fed goes December 18th. So it's a big monetary policy week. I didn't notice that either. but that's going to be really important to gold prices. It's going to be important to individual currencies, of course, for the respective central banks. So great to point that out, Ivan. And yes, central bank stories coming at you guys all week long. And of course, the big CPI event on Wednesday out of the US will probably be a headline event for the week. Ivan, before you go, before I kick you out, everybody make sure to go subscribe to Ivan on his own social media, his YouTube channel. You can find him on YouTube. You can find him on socials. And if you're in the Discord, you can also send him a direct message and ask him about one-on-one coaching. You can also do so by contacting him on his own socials as well. He does one-on-one coaching if that is something that you're interested in checking out, working with someone privately who can take it one step at a time with you. If that is something you're interested in, make sure to go subscribe to Ivan and send him a direct message for that information. Ivan, thank you very much for coming on, man.
Thank you very much for having me.
All right. Okay, guys, now we're going to transition here to Chris Pulver taking over the show here for about an hour. So make sure, don't go anywhere. Chris Pulver, of course, talks all sorts of different markets. He'll talk everything from currencies to commodities to stocks and options. And I'm also curious to hear his thoughts off of the big pop in China. Almost 7% up move on the Hang Seng Index. I mean, that's a big move for the day. So Chris Pulver taking over right after this. Check it out.
'Twas the night before Christmas, and all through the house not a creature was stirring. Except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night, I'm not really sure how he did that. Pulver alerts are now available at A1Trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
What's happening, everybody? Happy Monday. I'm about to put on some fresh trades this morning. And I did this last week on Friday for my final hour session from 3 p.m. to 4 p.m. I put on a hedge on the SPY. I'm going to go ahead and put in a small trade on the MES, which is the micro futures for the S&P. If I buy a 61.60 put, it's going to cost me about $290. It's a fraction of my account, like a 0.2% risk. I can risk the whole thing. Any downside move, any downside that we have, I would say if we come back and retest, any gaps or gap fills, I'm looking to do some quick hedging. I'm doing this because the IV rank is so low on the SPX and so low on the SPY. Any type of uptick we see in volatility would probably be a downturn in the market. We do have, like Elvin and Nick said, 6 rate decisions in 2 weeks. 4 of which are coming this week. We got the Fed and the BOJ back-to-back next week on Wednesday and Thursday. We also have U.S. inflation data this week on Wednesday and Thursday. So that being said, I'm going to go ahead and take a stab at this one, a 61.60 long put. See if I get filled here for about $57 to $58. Let me get $58 or less and take a look here. So let's go. Filled at $58. There it is. So there's my $58. Add this in. This is going across the board on everyone's account. So just give me a moment to place these trades. Okay, almost there. Oh my gosh. Dave, if you're watching, you're killing me, dude. I need you to get on that future stuff. All right, let's try this one. And this one. All right, so that is in. I'm going to update that in my tracker. I'll put that in Discord as well for my Pulver alerts. I'm going to go ahead and set a chart alarm. I'll move this one up to around 60, 61. This is the SPX feed. Actually, let me move this. I kind of like that area. That's a bear call spread. I'm going to update this and say check on check MES long put. Okay, and on that, let me take a look at the MNQ as well. Actually, let me just check the Qs for a second, or NDX. What would this area be? If we came back to retest this level, 21.4, how many points away is that? 21.4 would be about 115 points lower. We'll see. I think I'll just stick with it. I already did the SPY. There's the S&P. NASDAQ might be a little bit more vulnerable. I just don't want to overpay for the option. Let me see what it would cost me if I did a MNQ. So if I went /MNQ for micro NASDAQ, went out to the end of the year, buying at the money put. I already have a 21,200. This would cost me about $600. Yeah, I'm not going to pay that. I'm gonna keep it at like $200 to $300 for the hedge, with no real cap or having like 300 to 400% upside on those if we have a downturn. So, all right, let me post that in the A1 Trading Pulver Alerts. So that's going to be under futures trades. This is a new trade /MES 12/31 expiration. And I bought the 6160 put, paid $58 debit, filled, and that is for max risk about $200, max risk per contract, and there's no profit limit. I'll be happy if profit shows, let's say, $500 to $1,000 in gains as a hedge. All right, so let's go MES here. There's my feed. Where am I looking to take this down towards? We're already turning red for the week. I mean, I suppose if we took out last week's low, so we've been inching up with these slightly higher highs. I thought it was interesting. Like, we've had 57 all-time highs in the S&P this year, but over the last, let's say, month, these all-time highs have been pretty lackluster. Like, literally, you're talking about a new high that's like 0.1% higher, and then the only one we had a decent stretch on last week was we gapped open from Tuesday to Wednesday. So Tuesday's close to Wednesday's open was a gap open, and then we melted up on Wednesday, and that ended up being a 0.5% move in the S&P. Everything else has been like these 0.03s, 0.05s, less than 0.1%. All I'm saying is, if we were to head back down and actually challenge a low, then I want to protect some profit. So I'll put a 60-40. This would be taking out previous week's low. Check for hedge profits. So just before we get to those lows, that's enough for me to say, yeah, it's a good little chunk to the downside. Point wise, if I turn that into like a $50 move or a 0.8% move, depending on what happens with, IV rank or implied volatility, we might see those option prices increase pretty dramatically, especially if this happens, let's say this week. I bought the timeout to the end of the month. If it happens this week, I'm going to get that extra, the acceleration move, which is kind of my delta will increase, my gamma increases the delta, and that could end up, that $290 risk could certainly pay, maybe 50%, 100% gain, which I don't mind. I'm just doing it as a hedge. Okay. All right. So that's what I'm going to look for on at least MES for right now. I'm not going to pay for the MNQ unless something happens, but I already have positions out there a little bit longer. Now let's go back to what Nick had said earlier. China, big deal overnight. I saw this headline last night. They injected like 474 billion yuan into the market. We have a 2.7% jump on HSI. We've got Alibaba ripping to the upside as well. JD, I've got an income trade on JD. That's a nice move back into the 40s. Let me take a quick peek at my JD positions. And I mean, really, my China positions overall are doing a lot better. Part of my P&L today is all because of China. $22,000 to the upside. I've hit a fresh high in my portfolio for the year. And a lot of that is, look, it's not done. I'm just trying to figure out, like, what do I need to do to preserve some of these gains and roll down some or I could roll down some calls, or I could roll out some calls, I could roll up some puts, I could do all sorts of stuff to try to generate additional credits on some of these positions. So if I take a look at Baidu, for example, okay, I have 111 shares. Currently, they are covered at 95. Now that is a way to just get out of the stock for a couple of bucks. My break even is in the low 90s. So let me double check something here. Because now that we're up, I mean, I might benefit from like maybe 1 week out and get a roll out of that. Let me see what that's doing. So it is showing, let me get this over here. There we go. So right now I've got some profit on that call, but there's a lot of price jumping on these option chains with that big push to the upside. So let me see if I can roll this out, and let me see what my net break even is on my tracker here. So I'm going to go BIDU and go to my break even. So right now I'm showing a break even around $88 and a break even of around $87.50. So if I have a break even, let's say $88, and I get it called away at 95, I'm still going to keep 11 shares. And I don't know if that was from like a dividend play or something. I don't know how I get. Oh, actually, never mind. I bought 11 shares because it was a $1,000 allocation. That was around $100, and then I kept on a credit spread. I kept another 100 shares. So anyway, if I turn this into, let's say, break even at 88.18, get it called away at 95, and make 682 on 100 shares. It's an income trade of $682, and I've got that on 1, 2, 3, 4, 5, 6, 7, 8, 9, 11 accounts. So it's a decent chunk of profit just on Baidu. Could I roll this right now? The rest you can see here, an 85 by 80 bull put spread, 80 by 50 bull put spread. Those are fine. Those are looking fine for profit. I'm really looking to, keep the income. And let me see if I can do a quick roll on this. So if I roll this out by a week and I keep the strike the same, I get 55 extra cents for that, which is not a big deal to me, to be honest. It's, especially just one contract that, make an extra 50 cents. It's not a bad deal, but more than anything, it just lowers my cost basis in case it doesn't get called away. If I wanted to increase this is where it gets a little dicey. I can increase my strike by $1 and I can still receive a net credit for that. So if we are going to see more upside, if I just go to the price on Baidu right now, let's go BIDU. I mean, if we get back to anywhere close to these September highs, Baidu is trading up at $115, $116. So for me, it's like I'm kind of stuck right now to say, like, there's not really a lot I can do with a 95 unless I'm going to go out even further. So to that point, I could go out further in time, and I could give, typical seasonality would be, okay, if we have a Santa rally where nothing really disrupts the market, China continues to announce additional stimulus and kind of lift the animal spirits, and we get a nice little rally into the end of the year. I just don't want to go out too far. I mean, I said if we have China stocks revisiting the previous highs from September by the end of this year or into I really January, it's like I don't even want to say Q1, then I'm going to look to take some profit. So if I go out a little bit further, let me take this down to 95, keep the strike the same. If I roll this out in time, I mean, so I go out 2 more weeks, I can get an extra $1. Now that's not bad. I turn my income trade from, almost $700 into $800 of profit. That's okay for a couple extra weeks. If I go out a little bit further, could I roll this out to the January 29th or January 10th and also increase this by $1? Now I can increase it by $1 and get 70 cents for that. So going out 2 weeks, I can get an extra 70 cents and also increase my strike by $1. So that gives me another $170 over the same period. That's not bad. Could I increase this one more $1? Now I could get $2.38 of profit, right? So, I mean, I can, this is interesting. How much further do I have to go? So that's a big jump in the strike price. Notice how the strike prices go from 95, 96, 97, then they skip up to $100. I have to pay for that one because that's $5 higher, but I'm only paying 50 cents. I'm paying 50 cents to get another $4.50 of profit. But the problem with that one is it's a debit. So that would increase my cost basis. So if I went to 97, if I can get 40 cents and increase by $2, like that's a pretty good chunk for $2 of holding. I might do that actually. Let me see if I go out another week. Okay. So, all right, I can't. If I go to the monthly expiration on January 17th, the strike prices suck. They go from 95 to 100 to 105. They don't give me the flexibility to trade within that kind of dollar strikes. So I'm going to take this down to the January 10th expiration. I'm going to roll this out to the 10th and roll this up to 97 and see if I can get like 45 cents on this roll. So I'm going to roll this out 2 weeks and up $2, try to get 45 cents. 68.30. Not filling at 45 cents. Let me try to work this down to, let's see if I can get 40 cents out of this. You turd. 40 cents not filling. 35 cents final offer. Not filling. Son of a gun. All right, I'm going to cancel that. All right, let me not bore you with those details. Let's go through the. I'm gonna work on this, offline here. But I've got BIDU. I've got Alibaba. I do have some shares. We're up to 92. Alibaba overall is looking really good. I've got credit spreads, ratio spreads, all sorts of stuff on Alibaba. This one for my overall account should be a decent profit. Alibaba is up around $7,800. Baidu right now is still, because I have the ownership, this is where I'm down the most. But if I turn, 11 accounts at $700 each, that's, $7 grand, $8 grand in profit, and I'm showing upside down 38.50. So that's a pretty big swing. That's like a 10K swing in profit for me, which I'm happy to have, obviously. And then some of the other ones, I have the FXI exposure. I'm up $8,100 in FXI. I do have some shares of that one, and they are currently covered at 29 out to December. This is one that I probably should consider rolling if I can get it rolled out another week. This is probably a good one to roll. So let me take a look at this one. So JD is another one. I have 500 shares. They're covered at 38.50. So I'm going to look for some rolls on this one here. FXI 33.25. I have the shares. They're covered at 29. My break even on FXI. Let me check. Break even on FXI. Break even on FXI. Still looking. Okay, that diagonal spread was rolled. There we go. 24.26 is my break even. 24.26 is my break even. So right now, if I did nothing, okay, 24.26, get it called away at 29. So I make $474 per contract. Okay. Now what I'm going to look to do here is, since we're trading at 33.26, I'm not looking to get super greedy here, but if I can generate just an extra credit and maybe another week, get this out by the end of the year, let me look at a quick roll. So right now, if I roll it out by, you got to be kidding me, man. If I roll this out by a week, they're going to tell me to pay for that. Well, that doesn't make any sense. If I roll it up, let me try another expiration here. So the 27th of December doesn't look good. That doesn't make any sense. $29 call. Quick roll. I'm surprised it's not showing a debit. Or I'm sorry, I'm just surprised it's not showing a credit. That is weird. Let me go out another week. I don't think I can get anything for this. All right, the bid ask on FXI is super wide, so that may be something I just have to let it get called away. And it's fine. I mean, I have credit spreads here, the 30-50 by 30, the 31 by 30. Those are actually looking pretty decent. Let me see if those are in profit. FXI here. So FXI, where are you? There it is. So my 31 by 30 is trading for just under a 50% profit, 50% profit. And then my 30.5 by 30, this one, probably not a bad spot. Let me check those prices. These both have some decent profits. So my 31 by 30, I got into that one for just shy of 50 cents. So that's 214 minus $1.57. I collected 57 cents on that. Okay, and this is out to the 20th, which should be next Friday. So can we stay above $31 by next Friday for full credit, or do I want to just take the profit and run? Right now it's up about $210. My max profit on this one, I'm trying to think what my max profit is. I've got 57 times 500. Nope. 57 times 500. My max profit is 285, and I'm up 210. So 210 out of 285. I've got 74% of the profit today if I want to take it, and I have no risk on the trade if I just take the profit and run. Same thing here. I collected about 27 cents on this one, and it's trading down to 8 cents. So I could take the, it's roughly $200 of profit. My max profit on this one would be 270. So what's 200 divided by 270? So each one is sitting around 73 to 74% of my max profit. Probably not a bad thing just to protect, just in case. I mean, I don't know. I mean, if there's any disappointment where it's like the market's caught off guard and all of a sudden it's like, oh, this stimulus doesn't mean that, doesn't mean what China's saying it means, and the market fades it. I don't know. So if I've got the money in front of me, I'm probably going to take it, protect it, also minimize some of this exposure. I'll keep some of the ownership on Alibaba and Baidu. I don't mind having those. I'll keep the JD position as well. So I'm going to try to roll those and mess around with it. But it looks like FXI, it doesn't look like I can roll it for any credit that would be worthwhile. So I'll probably just take the profit on that one. JD, Alibaba, Baidu, I'll kind of work the shares that I have. K-Web should be fine. I've got some long calls on that one. So anyway, everything in China is taken off, which is a good thing. Okay. Yeah, good question. Blaze says, do you even understand what you're trying to explain? Nope, I have no idea what I'm doing. None whatsoever. I just come into these sessions and just randomly talk about stuff that makes no sense to me whatsoever. Okay. So anyway, no, I'm just walking through everything that I'm just thinking out loud. That's the nice thing about, look, here's my live account. Here's my portfolio. This is stuff I've got to do every day from opening bell to closing bell. And so you're just getting a snippet of like, this is what my brain does for the hour. That's from 10:15 to 11:15 or whatever I'm live. I'm just talking through my trades. Okay. So anyway, offline, I'll work on the rolls and figure out what I'm gonna do with that. But a lot of my P&L today is because of that big jump in China, which is totally great. Amazon's hit some all-time highs. Let's do some top down. So we're sitting here kind of red for the day. S&P down about 0.3%. Q's down about 0.6%. The Dow's flat on the day. The Russell is down. Actually, this is interesting. The IWM is up 0.3%, but the IWY, which is the top 200 growth, is down about 0.5%. IWX is the top 200 value, which is flat on the day. I'm going to watch and see. I think that these small cap. So the IWM is your traditional Russell 2000. Your IWY is your top 200 growth. I like the idea of kind of playing the top 10% of the small caps. Growth is going to be probably more of like any small company that's getting into the AI space could be showing some benefits through this IWY ETF. And then the value side, I'm still not convinced that we go into like full on value trades. I think moving forward, you're just going to have good companies that have limited debt, that have high margins, have good cash, have just good fundamentals. And I'm just tempering expectations to think like, I mean, if you think about this, from the bottom in 2022, if I go to the SPY for a second, okay, from the bottom of 2022, which would have been that October low, this market, and I know that this is like calling the bottom here, but just the pace that this market has created in 2 years, the SPY is up from actually that's 2023, my bad. Let me go even back further. So for the last couple of years, I meant to go the 2022 low. So this is in October 2022. Okay, this market is up 74% in just over 2 years of trading. Okay. So that's 37% per year since the October 2022 low. Now, I know that that's picking a bottom, but from that low to now, we've had an incredible run on the S&P and an incredible run on the Nasdaq. Now, typically the S&P is on pace to do about 8 to 10% a year. We know for the last decade plus, this has been like a 15 to 16% annualized gain. We are like nearly doubling the performance of the average S&P, right? All I'm saying is I don't know if the S&P can produce another 20 to 25% year. I don't know if we can produce another 20, 25, 30% year. I think that when our S&P, price to earnings valuations are in the 25, 26s, I showed this screenshot last week, and I'll just revisit it. Okay, right here. The last time we had this big price to earnings valuation was during COVID, and it's this number. Let me box it in. The numbers might be small to see it, but 2020 price to earnings was 30.7. Okay. What happened over, and again, it was a nasty month, right? But I think that we kind of bought our way through and stimulated our way through what should have been a reversion. That COVID crash was this little excuse that the market moved to offer up like 8 to 10-year discounts. And it did, and everyone bought it. Okay. And then 2020 through the rest of the year and 2021 through all the momentum until we topped out in November 2021 and January 2022. Those valuations were bananas. And now that we're sitting here at 26, just saying we're a little frothy. Okay. Valuations matter. Reality matters. At some point it matters. And so if the Mag 7 starts to stall, that will weigh on the S&P. If the broader market starts to crack, it'll weigh on the S&P. If inflation, and we've had this conversation, we have inflation data Wednesday, Thursday. We're expecting to see a 2.7 print, which is 0.3 higher than our low. You look at your edge finder, we're starting to trend the wrong direction. I said, 1 month doesn't make a trend, but this would be 3 data points, 2.4, 2.6, and this is a forecast of 2.7. That trend, if you connect those dots, that's showing that our inflation readings are going the wrong way, right? And the Fed next week is still looking to cut by 25 basis points with about an 85% probability. So I'm not saying that this has to be the reason the market just, fails and all of a sudden the market is just flipping to a bear market. I'm just saying that we keep going higher. We keep melting up higher at these 0.1% higher highs, 0.03% higher highs. Like this orbit, okay, this orbit to the upside is starting to sputter, right? So if it's just now we got a little bit of liftoff still going, a little bit of drift still going, I get it. But a reality check can rock this market a little bit with some volatility. And I just want us to be prepared for a little bit of shakeup. Doesn't mean the market has to crash, doesn't mean the market has to rip, but just a little bit of disruption. It's been weird to see that we're back down to those really complacent, super low IV levels that we saw in the summer before we topped out in July. When you look at the SPY, okay, with an IV of 7.1, that was right before we started to see the market top out in July. And this went from 7 IV rank to like 75. Now, yes, that was because the Japanese yen was deleveraging and we saw a lot more risk coming in mid-July into early August. Could that happen again? Maybe. Okay. How many of you are prepared? And I'm just saying, if this happens, how many of you would be prepared? And hopefully, I'm not going to say excited, but would you be prepared for dry powder to be deployed if the market dipped? And I think this is the concern is a lot of traders, when they're sitting here at these all-time highs, they're fully invested. Okay. I am not. I have about 45% of my portfolio sitting in cash. Okay. Is that by design? Yeah. I like to have, somewhere between like 25% available. Sometimes when we're stretching these higher levels, 50%, I've got plenty of cash at the ready, which is good. But what happens is when we're sitting here at these highs and the market doesn't just keep going higher and everyone's fully invested, if we get a little bit of a shakeout, okay, most investors will panic, right? And if they start dumping positions or taking profit and just look, a discount is good. I'm still going to buy some discounts. I'm still going to stay the course. And I don't know if we're going to be full on crash, but I'm just saying from this point all the way down to this 200 moving average, we have about a 10% window to correct. Okay. If we come down to the 200 moving average, that is a 9.7% move to the downside. Now, I've mentioned this for months now, but if I'm watching the 200 moving average, we have a 278 bar count, which on the daily time frame is notable. It's not too extreme, but it's notable. Okay. And on top of that, we've stretched out where we're about 11%, 10% higher than the 200 moving average. Okay. From the recent all-time highs. So that would have been from last week. Okay. All I'm saying is from this recent all-time high to that level, it's 10%. You can look at this chart and you can see how many times this market has pulled back. Even this stretch away move here. Okay. We have a pullback. We have a pullback. We have a pullback, 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 we have a pullback. This is what the market does. Even in a healthy bull market, we have pullbacks. Then we had a correction. Okay, it pulls back here, pulls back here, pulls back here. That's all I'm saying. So I have cash at the ready for deployments if we have a better price. Okay, now, yes, it could go to the upside and people can sit there and say, like, well, Chris, you're missing out because we're going to go higher. Yeah, maybe we do. And maybe I do miss out as far as my capital that's not deployed, I miss out. But where I make up for it is if this market does in fact show a dip, and I'm not saying it has to be now or by the end of the year, it could be, Q2 of next year, could be the second half of next year. I have no idea. But I will be waiting for an opportunity to buy at better prices. Because look, historically, things are a little bit high. Valuations are high, price to earnings are high, price to sales are high, price to peak earnings are high. If earnings season is not going to crush it again in Q1, we could have an easy reason to fall a little bit or go sideways. Okay, so I want to keep the cash at the ready. I'll keep taping my stabs with these little tiny hedges. If it goes up, that's easy. If it goes up, everything else up. Right now, the good thing is the U.S. markets have still done really, really well the last couple of years, like extremely well the last couple of years. The total market cap in the U.S. is killing it. It's like 63% of the global market cap is U.S. That's how strong the U.S. economy is. That's how strong the U.S. stock market is. But then you look at world power number 2, adding stimulus, continuing to be vocal about stimulus, supporting the property market, supporting the capital markets. And every couple of weeks, they're pretty consistent right now. They're trying to put in a floor. They're trying to get some animal spirits lifted. And when you've got, U.S. resiliency plus, the Fed is cutting rates, that's fine to a point. When then they start to pause, they'll probably pause through most of 2025. But with U.S. and China both, supporting their markets, both wanting to see higher highs, it's not something I want to fight. So I'm not calling tops here. I'm just going to be prepared for, look, if we have a 3 to 5% correction, just be ready. If we have an 8 to 10% correction, just be ready, because what we don't know is why it's going to happen. That's what's so tricky. It's like, should it happen? Yeah, probably some type of pullback should happen, but I don't know what it's going to be, and nobody knows. It's like, it's the thing that nobody's talking about right now. There's no headlines about how the next 10% correction is going to take place. Nobody knows. Okay. I'm just saying that whatever lines up and the market uses this like bundle of things to say, this is why the market's going to correct. It does it, and it does it really, really quickly. But I think having cash at the ready, we've gone up, pretty much nonstop since late 2022. If all we had was a correction and then the market kind of picks itself up, a range is very tradable. Okay. What I don't think anybody's prepared for is a correction and a dead cat bounce and then a lower high, lower low. I think that move right there would be where everyone would start to be really fearful, because that would make some major structural damage. That would make for some major structural damage in the market, right? If we actually took out for the first time, like a high to low, right? And all of a sudden we're back up here to higher highs. But if we have a high, low, lower high to lower low, that's where a lot of traders, I think, would be, freaking out, dumping positions, because that could be somewhere between like 15 to 20%. And that's not going to be fun, right? And then you wonder, well, is there another one? Is it another lower high to lower low? And then it looks a lot like 2022. We'll find out. So just saying, be ready. I think the hardest position for investors to be in is to be fully invested and know that if it goes higher, it's easy. Okay. If it goes lower, It sucks. And I'm not, it's not me. I'm just saying, but a lot of investors that are just fully invested in these, leverage ETFs and in these leverage stocks, and be careful, because any type of downturn, leverage is a double-edged sword, as you should know. Okay. All right. So some other top downs, we are kind of red on the day. A pullback hasn't happened in a while. So here is your S&P. Actually, directionally, we actually saw a decent direction today on the SPX. So I am glad that I, snagged my few profits this morning. So we're starting out, in red for the week. Let's just note a couple levels here on the SPX. There's the high, there's the low. Is this week's trading going to do any type of damage to take out last week's high or low? Well, there's enough news out there with US CPI data, PPI data, also 4 rate decisions this week. By the way, everyone knows or should know, who can throw in the chat here, what are the rate decisions that we have? I believe in this order, we have RBA, BOC, Swiss National Bank, and ECB all this week. This is supposed to be a pause, keeping rates at 4.35. Okay, the BOC is expected to be a cut by 50 basis points. Okay, the S&B is a Swiss National Bank. That's expected to be a cut by 25 basis points, with potentially more coming by the end of the year or into 2025. And the ECB is looking to cut by another 25 basis points. We also have US CPI, which is showing a 2.7% forecast, which is going to be 0.1% higher than previous. And that's going to be 0.3% higher than the previous low that we saw with that bottom in inflation at 2.4 before China started to get really aggressive on stimulus, PMI numbers going higher, inflation across the board looking like starting to go higher, food prices going up. The only thing that keeps I think, taming inflation right now is oil prices. Oil prices at lows, oil prices not getting above $70. That keeps energy prices pretty low for now. If oil prices start to creep up into the mid 70s, that's not a good thing. I think that's when inflation really starts to make headlines again of like, oh my gosh, here we go again, second wave of inflation. But anyway, that's what's going on this week. Okay, and then we have US PPI. I just think more people pay attention to headline CPI. Okay, next week, we have the Fed. Okay, what are they expected to do? Cut by 25 basis points. And then we have the BOJ. Pause. I'll put that with that inflection of my voice is exactly how I'm asking this. Like, I don't know what they're going to do, but I think the timing of that is really interesting. We've seen some highs, some high volatility out of the Japanese yen pairs the last couple of weeks. We obviously saw the big deleveraging happening this summer. I don't think the Bank of Japan is going to do anything radical, but I wouldn't put it past them. So this is a lot of news for the markets to digest for end of year positioning. Whether it's like, yeah, it doesn't really matter. The market will react to it later. We're crossing, wow, is that a gap fill already? That was quick. Okay, so that's, let me just check the MES position that I put on this morning. So MES right now, December 13th, that's a small loss on that hedge for right now. There's my 61.60. So I'm up about $41 in profit. I'm going to see if this gets a little nasty to the downside. I also put in that debit spread last week on Friday. Let me check this SPY position here. So my 608 by 590 right now, this is up around $100. So yeah, I mean, the hedges are there for a reason. I'm going to see if something gets really nasty to the downside, then we will watch. Okay, BOJ monetary policy next week. Yeah, so that's why I said, like, the Fed and the BOJ back to back could make for an interesting, kind of finale to the end of the year. I mean, that to me is like one of the major data points that will have the market, it's got to wrap its head around all this stuff. But the next 2 weeks are big, and it either is price either is supported by the news, interrupted by the news, or disrupted by the news. Okay, so what I mean by that is price is supported by the news, meaning that the news just makes the markets go higher, and the path of least resistance continues to be the same thing. Okay, interrupted by the news means, oh, hang on a second, things are a little messy, things are a little sloppy, but it just pauses and gets a little shaky for a moment, and then the initial trend or the already established trend is still in motion and can't be stopped. It just was a little bit of a head fake. Okay, disruptive is why I'm hedging. If we have something disruptive where all of a sudden we take out a previous low, we pull back and we fill some major gaps, and all of a sudden the trajectory we've been on just completely changes, that's disruptive. The news can do all of that, right? Supportive, interruptive, disruptive. I don't know what's going to be, but it's enough for me to pay attention. Okay. All right. So just take a look at the simple indexes again. This is a 21 period moving average and a 50 period moving average. There's no major structural or technical damage done unless we were to take out this low right here. Okay. If we took out that low, then I'd say, okay, that's a pretty decent correction. That would be coming back towards the 100 moving average. And to me, between this 100 moving average and the 200 moving average, I would look to add more positions, and deploy some of that cash, right? Until then, I'm going to be hedged to try to find the 21 and find the 50. I'm going to be hedged until we find those levels. If I lose on the hedges, so be it. Because for me to sacrifice, let's say 0.2% of my account on a hedge, but the market goes higher, look, I can get an extra 1% there. I can get extra 2-3% there. I mean, today, my whole portfolio is up, I don't know, over 1%, 1.5%, just on a lift in China. So anyway, we'll see. I just want to be mindful that these moving averages could be retested. And if they are, I'll take off some hedges for some small gains. I'll look to deploy some capital if I like the levels I'm at. And I'm watching this in all the U.S. markets right now. Okay, volatility-wise, let's see where we're at. VIX is up about 8.6% on the day. We're going to see if these numbers change at all. Here's my SPY at 7.9 IV rank. Just make a mental note of that. Single digits IV rank. Does this jump up to 14 or 15? Does it jump up into the 20s? If so, we're probably going to have a bit of a move to the downside. Okay. All right. Dollar index. Dollar index. This is the one spot that I'm watching. I talked about this last week on the 4-hour time frame. Just don't take a head fake on the dollar. Okay. If the dollar is going to close below this 200 moving average, this is a 4-hour time frame. If the dollar index, this is DXY, closing below this 4-hour 200 EMA. If it closes below there, I'm looking to see, do we have a pullback and then a fresh low? I would look for a trend opportunity to see if the dollar is going to be fading some of this. Doesn't mean I'm short right now, because I said this market might still be bouncing off that area. Okay, still be a range trade on the dollar where it's supported in here, catching bid right around that 200 EMA. So I don't know, but this is the level that I'm watching. It's right around 105.50. So for right now, if we stay above 105.50, for some Forex scalping out there, I would look for the dollar to gain some strength. If we're less than 105.50, we want to see if there's some more downside to come in and find some, inefficiencies, or, okay, nice run on the dollar, come back and find some equilibrium, maybe be a big range trade. Okay. So it's just a couple levels that I'm watching. Really, it's that 105.50 is a really kind of critical spot for the DXY this week. Okay, we'll keep a close eye on that one. Oil prices, like you keep saying, this actually is a pretty shifty move to the upside. Oil prices on the day, up 2%. It's still making lower highs. It's still making equal lows. If we break the floor, it's probably good for inflation. If we break this structure and we get greater than, I'd say 71, if we get greater than 71, that's going to take out some previous highs. If we take out this high, take out this high, take out this high, that's probably showing that oil prices are looking to squeeze, right? And so do we get into the mid 70s? If so, that is probably not a good look for inflation. It's not that far away from either being like this market has to, break or fake out. I don't think a lot of traders, I wouldn't be surprised if oil prices go higher. I think that we are trying to force oil prices and try to bend it to our will of just go lower. Like oil price, I don't know. There's so many geopolitical things happening with oil that even a straight up Middle East conflict hasn't brought oil prices up. And now if we have domestic drilling in the U.S. and deregulation from the U.S. and maybe it stretches globally, I don't know. I don't see how oil prices are going to be, quick to gain. But the inflation shock, the quick like sticker shock would be like 75 to 76 would definitely be a bit of a squeeze. So the floor still sits around 67. Anything greater than 71, I think that makes inflation look a little bit stickier. Okay, natural gas, I'm going to wait on that one as well. Gold, gold's got a pretty decent run finally after 8 days of indecision. You know, I'd said this, I'm not really doing much on gold other than waiting, right? Yeah. Eunice, would you like to see gold? Type it in the chat a couple more times for me. Okay, we had 8 days of indecision. We're finally starting to get a bit of a break. Now, does that mean I'm going to do anything with it? No, because I'm already long. You know, I'm still going to wait and see, do we have a correction? Do we have some? One thing that was nice, I saw gold ticking higher and I saw silver outperforming. So that's probably another reason that my portfolio is up today, because I do have some SLV, I do have some GLD, I have some SI futures and GC futures. That's good. Okay. But right now, with this larger candle, all this to me is inside candle, right? There's no real confirmation that gold is going higher or lower until we break away from this big red candle right here. That nothing matters. Like this doesn't matter. This price action doesn't do anything for me. Okay? So I'm still prepared for a high, low, lower high, lower low. This is still where I'd like to add more to my gold exposure. If you want to draw a trend line and wait for more confirmation, then to let it get on the right-hand side of that trend line. Otherwise, this is inside this bar. It doesn't really matter. You know, it's a little bit exciting that gold's up 1.3%, silver's up 3.7%. That's great. Okay, we can compare that with a XAU and XAG chart. And we've also gone back on this one for the last, 6 to 12 months, and we've seen that since 2022, there's kind of a range performance on gold and silver. Now, the nice thing is both of them individually have been in a bull trend, okay? But when we see that this is heading lower, that means that silver's getting the upper hand right now. And I would love, personally, I'd love to see silver do this. I'd love to see silver outperform and come back into these range lows, and I'm curious where that actually takes the spot price of XAG. You know, I have a measured move around 38.80, and then my other one's around $44. So if I could hit target one on silver, whatever, this year, Q1, Q2, in the next 12 months, I don't really care. I'm just targeting that move. So if silver can outperform gold, that'd be a good thing. Okay. All right. So here's silver. I mean, that's a pretty nice bump right off the backside of this trend line, still well supported with all these moving averages. You know, I said watch this like 29 to 29.50 zone for support, and also this really key level at 26. So far, I mean, technically this is behaving pretty well. If this is, a pullback into find support, and then we're coming back up to hit this measure move, there's my 35. Actually, I think I said 38.80. I'm at 35.80. Sorry, 35.88 is my target one. So am I going to take profit there? I don't know. It depends, but I'm still going higher. I think we can get into the 40s. I'm looking for the 40s plus on silver. Okay, Bitcoin, a little bit of a retreat off that poke at 103. 103.7. I'm sure there's still plenty of bids out there. Just take, if we have a low and we have a high, I mean, it looks like with that 103 level, I'm going to go ahead and put that in as a fib. Okay, spike off to 605. Nice. That's fine. Yep. So we're getting deeper into the red today, which I'm totally okay with. This is why I hedged on MES, and this is why I have the SPY. I mean, being up $3 isn't a big deal, but being up hopefully maybe $10 is better to at least make some money if we have a downturn. By the way, am I good for the next like 6 minutes or so? 6 to 10 minutes? You haven't pulled me off yet. You haven't Sandman me yet. So I'll keep going. So Bitcoin, I'm just going to drag low to high. And where do we look? So if I saw Bitcoin pulling back into the 382 zone or even the 70% zone, I'd be looking for a bull pattern in here, or some type of, if it dips hard, like draw an aggressive trend line and then wait for the right-hand side of the trend line to be adding to it. So, I'll wait. I think Bitcoin getting some dips and pullbacks, post-election, we hit 100K. That was a big milestone. It's fine, But I do wonder, I mean, just the way that things are shaping up right now, all this news is coming out this week. Are we going to have like an aggressive pullback on Monday? One thing that the market might spend all week doing, by the way, is this. Let's say we pull back on Monday and we stabilize here, and then the rest of the week we finish right back where we started. So I mean, I might look at some opportunities in the near term to find, something. I don't know. I might look for some opportunities if I spot them. So just seeing. I mean, we have three bullish weeks in a row. If we take out last week's low, that's fine. I mean, does it do any major damage? It just. I mean, this is previous highs. So does it come back down there and test it? Sure. Then look for a bounce. But we'll see. I'm just curious what the week gives us. Last week's high, last week's low wasn't a big week as far as price. I mean, it only moved about 66, 67 points. It's like $6 or $7 on the SPY with an average of like 13. So the volatility again got really, really low. Okay. All right. Anyway, I left off on gold and silver, then Bitcoin. Let me go back to this chart here. SPX. There we go. That's a pretty big directional day on SPX. Here's Bitcoin. I'm going to wait and see if we get some pullbacks into this, like I said, 38% to 70% zone. That'd be a sub 90. Okay. We come in less than 90K. That looks like a bit of a bargain. If we come into around 80K, then I'm probably going to add more to my Bitcoin. I might buy another tranche of IBIT, FBTC. I might put in some options there. I might dollar cost average into just straight up Bitcoin right around 80K. Okay, and I might not get it. I might not get that pullback, but 90K and 80K, that we know there's enough volatility. I just see that we have some post-election inefficiency. So for a healthier bull market, I'd almost like to see the pullback get tested and then resumption. But if we just keep going higher and higher and higher, eventually that runs its course and we still end up coming back to that level anyway. So if we pull back to it now, that looks like a much healthier bull market environment to then, build and base, come back to previous highs over here, and then justify another support level, right? So 90K, 80K, watching those levels closely on Bitcoin. Ethereum probably also pulling back a little bit. Yep. So from recent highs at 4,100 back down to 3,820. My exposure is I need everything to stay above $60, which I think it will. ETHA, same thing. Copper, I keep saying this on copper. If China is going bullish, copper probably looks good. Japanese yen, I'm going to wait and I'm going to hope that the Japanese yen gives me something good to trade. If we come back down to these levels on Japanese yen futures, I will be long Japanese yen futures. Probably through credit spreads, but there's a QQQ move to the downside. Okay. Nikkei still choppy. I still have some shares with EWJ. DAX from fresh all-time highs. We could also be looking at some pullbacks. FTSE still chop. Oops. Oh no, don't do that. There we go. HSI still up. Wow. That's crazy. That's a big move for the day. So from is that right? I feel like that. What is this? Yeah, Hang Seng futures. Wow, that's a huge move, man. The HSI itself. Wow, HSI futures. That's a crazy difference. Look at that. I mean, this is some serious movement in China. Okay, well, we had that rip in September. Technically, this actually looks really good. To have this big move to the upside, we fall. We're forming what looks to be a bullish pattern here. I see this playing out one of two ways. Either this rips up here, bull flag, and keeps going, okay, which would be like this kind of the same type of pace that we had in September, which is like China could do no wrong. This thing rips. I mean, could we rip this to symmetry? That's possible, right? We go from low to high, higher low to higher high. That'd be an incredible run to have this type of impulsive move be matched by this next kind of wave of stimulus that's happening right in front of our very eyes. The flip side of that would be a price pattern. We come in here, we have a pullback, and then we break this as a neckline, and we have another measured move to the same highs or slightly higher. But there's not a lot that I see price action wise on HSI or even China stocks right now that don't lead to higher prices than currently. So I mean, right now, speculation wise, it might not be a bad spot to be looking to get long China. You've obviously had some discounts from that September move. If you're looking at something fairly attractive, I would say Baidu. It was really attractive. I should have just bought some freaking shares. I just put in that credit spread. This is a pulver alert. I mean, I put the 85 by 80 out there. I should have just bought some damn shares. I should have bought, maybe $1,000 to $2,000 of fractional shares, because that would have been a great trade. I mean, right now it's up 17, almost 18%. I think there's room to get back to the September swing at 116. But I say that I already had exposure on China. I had $40,000-$50,000 of profits in September. That was pretty much cut in half, or maybe even cut by 2/3 or almost 3/4 with some of these pullbacks that we've seen. So I got a little hesitant to get super aggressive on China because the market just seemed to almost call the bluff for a second. So anyway, something to watch. All right. That being said, let's take a look at Mag 7s for a moment. We did gold, we did silver, we did Bitcoin. Dollar index wise, watch that 105.50 zone. Apple, fresh highs on Apple today. Amazon all the way up towards 230. Wow. All the way up towards 230. We'll see if Amazon can sustain these runs. It's still one of my favorite stocks out there. Google looks pretty darn good. I'm going to add some more positions on Google. Let me see if I can get. I might do a ratio spread on Google. I'm willing to kind of own some shares here in like the 140s and 150s. I think I already have that trade running. Let me double check. Google. I have a 155 by 150 ratio spread. So I do have that one running just like I said. The 165 by 160 is a credit spread, and the 130 is a cash secured put. So, right now, I'm probably up like $7,000 or $8,000 on all my accounts with Google. I don't own a single share. Could I do another ratio spread? Maybe. I already have one. We're up a little bit. I think what I can do is I'm just going to look out probably the next 12 months and just stack time-wise. I'm just going to stack some credit spreads and say I think Google can go higher. I think that's a pretty safe play. If I said from 175 today and I go out 12 months, is Google going to be higher or lower? I would like to think that if we go lower, I can also take some shares in ownership. If we go higher, that's just income. So that's probably what I'll end up doing on Google. Is I like the price. I think we get up to these recent all-time highs back in July. If we break those all-time highs, and also too, I mean, energy, AI infrastructure, CapEx spending, future outlooks, consistency, makes money, limited debt, controls. I mean, Google is a monster player in large cap tech, right? Doesn't mean that large cap tech is the end all be all, but it's going to be hard to dethrone a Google or Apple or Meta or Microsoft or Amazon for that matter. I don't think Amazon necessarily is in the same space as the others, but AWS is a big deal. That's a huge part of the revenue, but it's hard to dethrone Google. There's going to be some small cap private equity competitors, right? But it's going to be hard as a whole to be, does Google ever get replaced as a top 10, top 20 stock? I don't know. Probably not. It's going to be an interesting world in the next 5 or 10 years. The adoption of AI and how fast paced that can be, we might just see a lot of private equity plays. And on that note, I think I added, hang on a second. Yep. So I added PSP. I shared this in my pulver alerts. PSP it's an ETF that allows me to have some, and it's actively managed, but it's an ETF that allows me to basically trade private equity. I had a lot of this in the hedge fund world. Private equity, it comes in all sorts of shapes and sizes. There's obviously companies that fail. There's companies that do extremely well. I've argued for the last couple of years that private equity might just be some giant bubble, but it's essentially, if you believe that this company is worth something, you put it out there in the market privately and see who's willing to pay for it. And so if valuations keep going higher and higher and higher, private equity shows gains. And then if you end up selling something to private equity, or you end up arbitraging and getting rid of things of private equity, those that had it make money. Those that have it now just end up paying more money for it. But it's a weird market, because if it's worth something that somebody else wants, it shows positive gains. But private companies don't have to go public. And if they don't ever have to raise capital, if they don't ever have to go and say, we need shareholder money, we're going to go public. I think that's what's interesting about the next maybe 5 or 10 years is we might have less IPOs, less publicly traded companies as far as like new ones, right? And those that are just going to be like, they're small, they've got plenty of raise, they got plenty of capital, and they, run like a very aggressive AI model that's high margin. So anyway, I've got some exposure in PSP, just something I'm watching. I've got it down here. I just bought a chunk of shares. It's a little like $1,500 investment, and I'm doing something at 70 and change, and then back down in the 60s as well. I can show you the chart right here. But I put that alert out a couple weeks ago. Yep. So I'm buying at 71.30, and I'll buy more in the 60s. I've got a pending order at $60, I believe. So I should have a pending order. Let me check. It shouldn't show up in history yet. PSP. So 71.35 looks like I didn't put it. Maybe it was a good. All right, I need to update that. I'm gonna buy more at like $60. So I'll put in a working order there. Okay, so I need to add that in. All right, good. I forgot about that. Okay, that being said, ratio spread is a strangle. No, it's not. Ratio spread is basically it's this. If I'm just gonna do a put ratio spread, I would sell. I sell 2 puts, and above that I buy 1. So it's basically it's like a naked put, or a naked put is if you don't want to own the stock. So I do a cash secured put, but what I do is I'll just use an example. I was talking about Google, right? So GOOGL. If I have a 155 long put and a 150, I sell 2 of them. What I'm expressing to the broker is I'm willing to own shares, and I'm obligated to own those shares at 150. Okay. But if I take this trade for a credit, let's say I got a $1.50 credit on the ratio spread, and also I have a $5 bear put spread, then what happens is I can turn my 150 ownership price into a 650 credit to lower my cost basis all the way down to 143.50. Now, if I just did a cash secured put, I'm only going to collect maybe $1 or $2. If I do a ratio spread, I can turn this into potentially $6.50. So even though I'm expressing I want to own the shares, I can own it for a little bit cheaper on that move. Right? So it's not a strangle. I just do it on the put side. I rarely do. I've seen some traders do that where I think it's called a Batman trade, which sounds cool, looks silly, but it's basically undefined risk where you do a ratio spread on the call side, ratio spread on the put side, and you're actually trying to keep price in between. But that above on the call side is undefined risk, and you can take the share short, which I obviously don't want to do. And on the downside, do I want to own the shares? Depends on the price of the stock. So anyway, right. And that's why I said I don't do ratio spreads with calls. All right. Anyway, I'm going to go. I'm going to do some more combing through the portfolio. I'm going to play around with the roll side on my my China exposure and try to find some more trades. So I'll let you go for today. We'll be back in a little bit. All right. I'll see you tomorrow. Thanks. Bye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.